In 2023, Dubai real estate transacted over 130 billion dirhams in value, the highest annual total in the Emirates' history. Prime residential prices in the Palm Jumeirah and downtown Dubai rose by over 20% in a single year. And the buyers driving that appreciation were not predominantly local. They were institutional investors, family offices, and ultra-high net worth individuals from Europe, Asia, Russia, and the Americas. Capital that had decided, quietly and deliberately, that Dubai represented one of the most compelling real estate opportunities in the world. Welcome back to Capital Above Convention. Today we're going deep on Dubai real estate, not as a lifestyle choice, but as an investment asset. Why is global capital flooding into the UAE? What are the structural drivers behind Dubai's property market? And what are the risks that sophisticated investors need to understand before committing capital? Let's start with the macro context. Dubai sits at the intersection of three of the world's most significant capital flows. From the east, wealth generated across Asia. From Indian business families to Chinese investors to Southeast Asian family offices, has increasingly sought geographic diversification in a stable, business-friendly jurisdiction. From the West, European and American capital has sought alternatives to politically volatile or heavily taxed home markets. And from the North, significant wealth has relocated following the sanctions and instability that followed Russia's invasion of Ukraine. These three flows converging on a single city with a constrained supply of prime real estate, a 0% personal income tax regime, world-class infrastructure, and a government with both the vision and the financial resources to execute ambitious development programs have created a property market with genuinely exceptional fundamentals. The numbers bear this out. According to Knight Frank's Prime Global Cities Index, Dubai was the top performing prime residential market globally in 2023 for the second consecutive year. Rental yields in Dubai range from 5 to 9% on prime properties, significantly higher than comparable assets in London, New York, or Singapore. And the UAE Golden Visa program, which provides long-term residency to property investors above certain thresholds, has added a structural demand driver that has no equivalent in most competing markets. What specifically is driving institutional interest in Dubai real estate? 4 structural factors. The first is the tax environment. The UAE levies no personal income tax, no capital gains tax on property, and no inheritance tax. For an investor holding property that appreciates significantly, the entire gain is realized without tax erosion. In a world where most developed markets are moving toward higher taxation of wealth and capital, the UAE's tax architecture is a powerful competitive advantage that is attracting an accelerating stream of high net worth residents and investors. The second structural driver is the regulatory environment. Dubai's real estate market has matured significantly from its earlier boom and bust cycles. The Real Estate Regulatory Authority, REITs, has implemented investor protections, escrow requirements, and developer registration requirements that have meaningfully reduced the risks that plagued the market in 2008 and 2009. The regulatory infrastructure now resembles, in many respects, that of a developed market, while the growth profile remains firmly that of an emerging one. The third driver is infrastructure and quality of life. Dubai has made extraordinary investments in public infrastructure, transportation, healthcare, education, entertainment, and hospitality that have made it genuinely competitive as a global city for the highest earning segment of the global workforce. When technology entrepreneurs, financial professionals, and business owners choose where to live and work, Dubai is increasingly on the shortlist, and where wealthy residents go, property demand follows. The fourth driver is the off-plan market. Dubai's property market has a highly developed off-plan sector, the purchase of properties before they are constructed directly from developers. Major developers, including Emaar, Nakheel, Alda, and Soba, offer off-plan units at prices typically 15 to 30% below anticipated completion values, with payment structures spread over the construction period. For investors with the right risk tolerance and time horizon, off-plan investing in Dubai has delivered extraordinary returns, with some projects appreciating 40 to 60% between purchase and handover. Now the risks, and Dubai real estate has real ones that any serious investor must understand. The first risk is market cyclicality. Dubai has experienced two significant property market corrections in the last 20 years, in 2008 and 2014, in which prime property values fell 40 to 60% from peak to trough. The market is driven by global capital flows and sentiment, and it is sensitive to global shocks in a way that more established demand-driven markets are not. Investors who bought at the 2008 peak waited until 2023 to recover their nominal capital. This is not a buy and forget market. It requires timing awareness and financial durability. The second risk is developer risk. The off-plan market, not despite improved regulation, still carries meaningful developer completion risk. A developer who encounters financial difficulty may delay or default on a project. While escrow requirements provide some protection, investors in off-plan properties must conduct rigorous due diligence on a developer track record, financial strength, and construction progress. The third risk is currency risk. Dubai property is priced and transacted in UAE dirhams, which is pegged to the US dollar. For investors whose wealth is denominated in euros, pounds, or other currencies, there is real foreign exchange exposure. A significant strengthening of the dirham against an investor's home currency could materially erode returns when capital is repatriated. The fourth risk is liquidity. While Dubai's transaction volumes are high relative to other emerging market property cities, it is not a market in which a large property can be sold quickly without price concession. Investors who need capital rapidly may find the exit process slower and more expensive than anticipated. This makes Dubai real estate most appropriate for capital with a minimum 3 to 5 year investment horizon. How do serious investors access the Dubai real estate market? The most direct route is direct property acquisition. Foreign nationals can buy freehold property in designated zones across Dubai: the Palm Jumeirah, downtown Dubai, Dubai Marina, Business Bay, and an expanding number of developments across the emirate. The purchasing process is transparent, relatively straightforward, and can be completed in a matter of weeks with the right legal and advisory support. There are no restrictions on repatriation of capital or rental income for foreign investors. The second route is through real estate investment trusts operating in the UAE market. Emirates REIT, listed on Nasdaq Dubai, provides exposure to a diversified portfolio of income-generating UAE real estate assets. This provides liquidity and lower minimum investment than direct property ownership at the cost of the premium returns available through direct off-plan or secondary market investment. The third route is through real estate funds and syndicates that pool capital from multiple investors to acquire and manage large-scale properties, commercial, residential, or mixed use. These vehicles provide institutional quality, deal access, and professional management to investors who want exposure to the Dubai market without the operational complexity of direct ownership. Dubai real estate is not a simple or risk-free investment, but the structural drivers, tax environment, regulatory maturation, infrastructure quality, and the convergence of global capital flows make it one of the most compelling property markets in the world for investors who understand the cycle, have the right time horizon, and approach it with the discipline that any significant alternative investment deserves. Subscribe to Capital Above Convention for weekly deep dives into the assets, structures, and strategies that the world's most sophisticated investors use to build and protect wealth. And I'll see you in the next one.